Let's go to Ajay Bodke as well. He joins in now to give us some fundamental views on some of the individual stocks that we're looking at. Ajay, hi, morning. We were just talking about the Reliance Jio soft launch for the employees, but as a whole, how do you approach some of the other players like Bharti, Idea? Because of so much competition increasing, would you be underweight on them?
Good morning. I think Reliance has sort of decided to invest close to $15 billion in the Reliance Jio venture, and I think although the soft launch was done yesterday, I think we're expecting the commercial launch to happen sometime in March or April of the current year. So I would sort of wait and see how sort of the launch goes through, what kind of traction Reliance Jio is able to get over the services currently being offered by Bharti before sort of taking a call on any of these names, because let's not forget that all these names are entrenched players in the telecom sector. They have sort of seen the vicissitudes sort of of the economic cycle. So I would sort of be worried of being underweight, as you put it, in any of these names right away.
Okay, what's the call on Reliance itself, Ajay?
I think we are positive on Reliance. We think that in the medium term, one should sort of accumulate the company at every dip.
Okay, accumulate Reliance at every dip. What about the market itself, Ajay? I mean, this year it's been all about the mid-cap and the small-cap stocks. Do you have any favorites now? Any stocks that you're recommending from the non-index large caps or even the mid-cap names?
Yeah. I think in the medium term, I feel there are two issues the market is focusing on. The upcoming third quarter earnings, and secondly is the upcoming budget. Now, insofar as earnings are concerned, clearly the IT sector, which will be one of the first companies in the sector, will be announcing results. We already have seen a fair amount of profit warnings coming from some of the large cap companies like TCS, Wipro, as also some of the mid cap companies. Also, if one looks at the performance of Indian IT companies vis-a-vis some of the global competitors like Accenture or Cognizant, there has been a tremendous divergence over last 1 year, where the American competitors have sort of massively outperformed the Indian companies. One will have to wait and see in the run-up to the US elections what kind of shrill rhetoric emanates from the American politicians and what kind of impact that has on the IT sector. Secondly, I think the sector to focus on banking. The advanced tax numbers of some of the private sector banks are extremely robust. If you look at Yes Bank numbers, advanced tax numbers, they're up in mid-30s or I think late 30s. ICICI Bank, HDFC Bank, both of them are in late 20s in terms of YOY growth in advanced tax numbers. So that is essentially indicative of the fact that the private sector banking will continue to do extremely well vis-a-vis the public sector banks, which continue to reel under a lot of stress assets. And also in the run-up to the budget, three issues market will focus on. As the bankruptcy code has been introduced as a money bill, I think its passage is a given in the budget session in the Lok Sabha. Also, I think whether the government is able to evolve a consensus on GST, and lastly, a roadmap for removal of various exemptions and also the reduction in the corporate tax rate, among other things, are what the market will focus on. I think the downside to the market looks very limited, maybe a couple of 100 points in Nifty from here, and the upside in the medium term in the run-up to the budget is around 83 to 8400.
Okay, that's positive to hear, Ajay. There's a slight buzz in your audio. We'll try and set that right. Ajay, that standout performance in 2015 came from the mid-caps. As Anuj was just explaining, even if you had put in the same amount of money in the 100 mid-caps, you would have made a 25% return, whereas a similar move in the Nifty would have actually meant a fall of 5% in your assets under management. What about the year 2016? Will you continue to bet on mid-cap outperformance?
I think it will be a combination of some of the quality mid-caps as well as some of the large caps. On the mid-caps front, I think certain themes in the capital goods and engineering sector we would be looking at. We are expecting the sector to turn around sort of from the fourth quarter of current financial year or latest by the first quarter of next financial year. And hence some of the players like Cummins India, which is the leader in the engine sector, and has sort of displayed tremendous resilience in the domestic market and sort of is doing fairly well in the export market, is a company we are recommending investors to bet on with a medium-term perspective. We have a target price of 1175 on the company, with a very strong sort of growth of revenues between 18 to 19% in FY17 and a stronger 26% growth in bottom line for the next financial year. On the road sector, again, I think Sadbhav Engineering is the company we advocating investors to look at, where I think, again, we are expecting around 25% to 27% growth in earnings CAGR the current year and next financial year, and a stronger 40% growth in earnings this year, followed by a similar growth trajectory of earnings in next financial year. So I think these are the two sectors in the capital and construction space one should look at. Also on the logistics side, I think we believe that it's a matter of time before the GST gets cleared. And there I think all cargo logistics is what our preferred bet is. We are expecting a target price of around 422 in the medium term in all cargo. Here again we are expecting a strong around 20% growth in earnings for the next financial year on the back of around 11 to 12% growth in top line for next financial year. On the IT space, I think Hexaware is our preferred bet. We are having a target price of 300 in the medium term there. A strong growth in top line of around 15.5% this next financial year, 28% earnings growth this year, followed by around 17% in next financial year is what we are penciling in. And on the pharma, this is a space where we have been consistently positive on the mid-cap side. Our preference always has been mid-cap pharma, advocating exposure in Aurobindo Pharma, Glenmark Pharma, and Jubilant Life Sciences. This entire trio, I think, has done well in the last financial year, and we are expecting the same run to continue in terms of both top line and bottom line performance, improvement in margins, generation of free cash flows, and on the back of large A&D approvals to continue, and hence advocate investors to look at this basket of Glenmark Pharma, Jubilant Life Sciences, and Aurobindo Pharma.
Okay, that's a whole host of stocks that you've recommended. Since you
Actually, Ajay, I wanted to ask you also about the ADAG companies. We've seen some consistent effort to sell off equity, even in a relatively better company like Rel Infra, to a PE investor and thereby delever the entire group. Is there anything you would pick up in that space?
Yeah, I think I believe that in 2016, you asked me sort of some of the mid-cap names. I think it is these asset owners that one needs to focus very closely on. Quite a few of them have marquee assets under their belt. What is really hampering their performance is the fact that they have been laden with tremendous amount of debt, and it is this and the necessity for repairing balance sheet is what the market is focusing on. Now, some of these promoters have realized that they need sort of to get monetize some of their assets or raise fresh equity capital to right size sort of the debt equity balance. And towards that end, one already seeing some steps being taken by the companies that you just mentioned. I think you mentioned Reliance Infra. The company, we don't track the company, but at least the media sources are telling us that the company is in advanced stage of negotiations to sell off their cement assets, utilize the money to repay debt. They also have, I think, got a Canadian pension fund to take 49% stake in the Bombay Circle. Also, I think on the anvil is the monetization of their road assets, which I believe cater entirely sort of to some of the urban areas, and all of the assets are commissioned. We also are seeing media reports about some of the other infrastructure companies, say JP Associates also has making noise about getting monetizing their entire cement assets. We are also hearing GMR had raised some equity or quasi-equity rather from some Middle Eastern sources. So we are seeing a whole host of these asset owners and Reliance Communications also, I think I need to mention, they have signed a term sheet and in advanced stage of negotiations to monetize their tower business. So we have to wait and see the fruition of some of these efforts that the companies have taken. And as and when sort of one sees the balance sheets being right sized, I think the market in its wisdom, will clearly sort of be attributing a higher discounting to some of these names. So this is a year in which one needs to keep a very close watch on some of these highly leveraged asset owners and their attempts to delever through monetization or through raising fresh equity.